Okay, I'm gonna start over. So, so I'll go over the moves from last night. So the 382 and the golden pocket is a strategy that I think I came up with. I haven't seen it anywhere else on profit taking, right? For two reasons. If you look at any of the if you look at any of the Fibonacci videos, oh, what's this chat?
Mike, I don't think you're recording.
Oh, I'm recording on my OBS.
Oh, got you. Okay.
So, um, so the 382 is a likely continuation point. That's a huge take profit because what a lot of the times the move will do is if you have this, and this is how you could identify and re-entries for trending moves, right? If I'm ever like catch a 382 retrace, like if a move is just moving up and up and up and up and up, if I'm ever like catch a 382 retrace, what that means is if you have this and it comes up, look for this as your entry, right? Don't just FOMO catch it. So if the 382 is a very likely retrace, we want to take profit there because that's a likely point to reverse. The other very likely point to reverse is the golden pocket, as we've seen. So a lot of times the move will do this. So that's why I'm like, look for a 382 or golden pocket for a retrace on an entry because this happens a lot. So that's why we use the golden pocket for profit taking because it's very likely that it can just do one of these and continue, right? If we're wrong on the trade of it being a reversal. And lo and behold, so in the chat, so you guys remember, where was it? It's in general chat. So remember this right here? I was like next golden pocket. So, and this lined up with my next take profit, which was, okay, so 36.4. So we hit the 382 on the take profit. So we hit the take profit one. So potential reverse point. I mean, look at it. It got a bounce. And then 36.480 next. 36.470. So I always like to front run these levels. So in taking profit, if we, so like let's say the level's at 36.470, even if we go 36.500 and we miss 30 pips, that's so much better than if it stops like $2 above the level and it just reverses and you never hit your take profit. So when you get pictures like this, I always set take profits a little above the 382, a little above the golden pocket, and this is pulled from the last swing low to swing high. So hope that's making sense so far. But this is why this is a huge take profit for me, because this is the same golden pocket that we had. So we took profit right here. We don't need to get greedy and catch the last, what is this, 198, so 200 pips. I mean, not bad, but we don't need to get greedy and try to catch this, because if this happened and we missed our take profit, then from the previous take profit point, that's 400 pips that we missed. So we don't need to get greedy with that. But look at that, lo and behold, the golden pocket. So I personally wasn't up for this, but it produced a 2,000 pip trade. You could have easily 300, 800, 2,000. So that would have been a very nice, very, very nice long trade. And then I do want to point out one thing, because I get asked a lot about positions. So I want to teach you guys to do your own trading for two reasons, right? Like, I don't mind people asking me like, hey, you have a golden pocket there. Would you take it on this time or would you not? Because keep this in mind. I have a short from 41K, 40K, and 39.1K. I have a long from 30 and 31K, right? So if you ask me a question on should I enter at a certain point, my bias is automatically, if this was me trading, would I take that trade, right? And a lot of the times with the original entry, like this is a nice golden pocket to try to scalp. But think about it, if you're in a long from 30K and 31K, you would probably not risk this trade, right? I mean, it turned out to be a very decent trade, but I mean, just from a perspective of putting risk on, this is probably not a good area, right? If you're already in from lower. Now, if you just want to scalp a 300 and 500 pip move, that's perfectly fine. And sometimes they turn into 2000s. Oh, and the other thing is, if I can't monitor the trade, and if you ask me if I'll take a trade and it's at night, I'll probably tell you no, because this happened overnight and I was not awake for this. So if you guys learn to do this on your own and set your own alerts, that would have been a super nice trade. But I want to talk about this entry right here. So if we remove all the GPs and whatnot, so this was the trade entry that I had set up, and I think this is where I started the stream yesterday, coming up to this point, right? So this is what we saw coming up to the stream. So usually, where's my naked? Where was my point of control? So we have two strong levels right here, right? And this is a very good tip going forward when I give entries. Usually you'll see this. You'll see a major level or a cluster of levels and another major cluster of levels all within one sell zone. The reason I do that is because when you have resistance this close together, a lot of the times it will either respect the first one and produce a good bounce and then come back to the second one, or sometimes it'll just completely reverse at that first point, right? So this is why I give you two likely places. You can treat this, if your account can float it, you can treat this as all in one trade. And on Bybit, this is really easy to do and treat it all in one trade, and it'll just average your position. Like if I laddered in entries and hit them all, my average position would be right about here, wherever I put the entry in, right? But if you have separate trades on MT4, this is a pretty hefty stop loss right here. That's 900 pips. But, I mean, from the monthly, that's not bad, right? It's 500 pips. And there's a specific reason I put that there. So if you have a trade like this, and you have a smaller account, pay attention to this. But to be fair, I also did give this on stream. I gave this entry on stream. So this short, I literally, as we were hitting, I called that short out. And so if you had positions, ooh, we need to go back. Sorry. Okay. If you had positions here, okay, and you entered in this short, like even if you had preset, entered in this short, I would treat this as a separate trade than this, okay? So you had this entry, and then this one was a hard to do your 382 and your golden pocket retrace. So this was your 382 and the golden pocket from the swing low, but this was your local, right? This was way too close. So I had 300 pips as a major target and this as a major target. So this is how it played out. Oh, and as a second note, so we had take profit one somewhere around here in 300 to 400 pips, and then it came back, right? For re-entries like this, coming back and taking this entry is viable with a full disclaimer, right? Because if it comes back, one of two things could happen. It can shoot through. So I would just watch the rejection and buy it on the rejection. So you probably would have got it right here. But if you got in up here, your stop loss, you can just put above the previous high and you have a less than 200 pip stop loss. So although this is a riskier entry, you have a smaller stop loss. So like your win ratio on these is a lot lower, but your risk, like you're risking, you can do this twice and that would be your regular stop loss for a full trade, if that makes sense. So for me personally, and again, like if you asked me if I would have entered in right here, it's kind of hard for me because I'm already in from right here. So it's like, do I want to get in again right here? Maybe. So that's why, like, sometimes when I get asked these questions, I always think about from my perspective, and it's a little bit harder because then I try to put myself in someone else's shoes, but it's like always at the back of my mind, how would I trade with my current positions? But this was a very viable short because you had a really easy invalidation, right? Just like if it came up to right here, that would have been perfect. Very easy, like 50 pip invalidation. So look at this, came down, hit the 382. That was about 800 pips. So from here, 382, about 800 pips, super nice. Look at that. We missed the 618, so I'm glad we took profit right here. So And then this trade gets stopped out, which is perfectly fine because then we have this trade. And notice where, so there's a reason why I put the stop loss above the golden pocket. And I'll go over how I got these golden pockets too. Look at that, did not hit the stop loss. Okay. So this is where I got asked questions. Okay. So let me back up here. This was your, if you took this trade off of the monthly on that first rejection, you would have been in the trade. So presetting here would have worked, although it was a very bullish trend, but we did have a very strong golden pocket level. And I'll go over the strength of golden pockets and I guess you guys will see, right? So this rejection was a strong rejection, so that's a good sign that you can stay in the trade. Okay. Second retest of the big monthly level was also a viable option. And this right here. So I believe I posted this in the group too. Okay, so we were right here, and I was like, besides the hard monthly rejection, this is the only other entry I consider, right? Stop loss could be less than 300 pips. So this was another golden pocket, possible golden pocket rejection. You know, so you have your swing high and your swing low, and this is the golden pocket right above the monthly, really close. So just like remember this entry where you had a small stop loss, now we're getting to the bigger buy zone. We have wider stop losses. But if you took it off this golden pocket, okay, so it did overshoot the golden pocket, but if you took it from the middle of the golden pocket, that was less than a 400 pip stop loss. So you had a very easy defined stop loss above the last high, right? So very little, very easy defined stop loss. Plus you're hitting the golden pocket rejecting. And we had a big monthly level here too. So if you watch the support and resistance part 2, you'll know monthly levels are stronger than weeklies, then stronger than dailies. So if you weren't comfortable taking this off of the golden pocket, what you can do next time is, because remember, like I said, hard reject of the monthly level, right? So this was your sign to keep an eye on it. It did reject hard, which is a good sign. And then if we go down to the minute, this actually came down, actually back tested the monthly, and then came back down. So this would have been your entry on the monthly, if not this, right? And then, so as a general rule of thumb, if you hit the golden pocket, reverse, and you come back to the golden pocket again, it's not going to produce a second reversal most of the time. So if you entered here, you could have had another stop loss of 200 pips, very well defined stop loss, right above the last high. Actually, I took a second entry somewhere over here too. So I had a main entry that averaged like somewhere right here, I believe. And then I even took a second entry right here. So back to the 5 minute here. Okay. Oh, pause. Okay. So remember, profit taking strategy. You go, so there's two possible places you can take this. You can take this from the overall swing low to swing high. That'll give you a wider target. Or you can take this if you want to be safer, right? So let's go over this first. And this is an art to identify where to do these FIB pulls, but it takes a lot of practice. So if you did this pull and took profits, that was viable. I had to take profit right here, but that was also around your like 400 to 500, so that lined up, so I didn't say anything about this golden pocket. But look how well this golden pocket caught it. By the way, if you guys aren't seeing the magic of the golden pocket, like it's everywhere, man. So this bounced, you would have had at least a 300 to 400 pip take profit if you wanted to scalp long here. So you could have went short, long, right? if I was like, if this happened in the middle of the day when I was bored, this would be like prime scalping. So let me do this.
So casual, Mike. If I was bored, I
So if you
could
guys
have
want to
just
see some
scalped
crazy
it.
golden pocket stuff, so this is inside of a major golden pocket, okay? And then we had golden pockets inside of golden pockets like for days, right? So we had this, um, we had the okay, we had that one right here. Do we have any other ones? I think those were the big ones. But to be fair, let me see if this one caught it. No, that one wasn't a perfect catch. But even if you did, you still would have got. Nah, that wasn't a good one. But you have all these golden pockets catching the highs and lows. So this was a great take profit target. This was a great re-entry. So this is where I posted in the chat. This was remember this number, like the 36 for, I think I had 70, so I did a more exact pull. This was the major take profit for this reason. So you have your swing low to swing high. If Bitcoin wanted to take off or catch it and take off, this would have been a prime area. So this was a huge take profit for me. This is why I stayed up so late. I actually didn't see the take profit happen, but this is why I just wanted this take profit to happen, because this would have been huge. And if you're not in a long, this would have been a very viable long as well. You have your stop loss defined. You can just put it below the last low, right? Two lows. So right here, less than 400 pips, right? So look at that. So if you took it in the middle of the golden pocket or from the 6-6, it would have not even hit a 200 pip stop loss. So golden pockets on golden pockets, man. And this, of course, came and took off. So the way you would have, if you took this long, the way you would have did your take profits. Okay, so this is why sometimes I can't always give you all the take profits ahead of time, because you can target, like if you took a long somewhere down below, like this monthly level was a take profit, right? But these local areas, like I can't give you this because I don't know if it's going to stop right here, if it's going to stop right there, if it's going to stop right there, if it's going to stop right there. So I don't know where this pull is going to come from. So that's why, like these moves, you just got to get good with your fib pulls. But also, as a general rule of thumb, before you identify these, or if I'm not awake to give you these targets, just set to take profits for yourself. Like you can go a hard 300, 600 pip take profit, right? Or go 400, 800 pip take profit. Sorry, I never realized how thirsty you get doing this. So check this out. You would have hit take profit 1, and look at that, lines up with your 400 pips. So you probably would have went under, a little bit under. So you probably went like 380. Good. 800 pips. See how well this is lining up, by the way? Like Bitcoin has a lot of these signatures that just play over and over and over and over again. And you can call this stuff to a T. And then, so what you could do is take profit here, and then, you know, if you have a third trade, if you want to get greedy with it, let it run. If not, you can just do like a random 2,000 pip take profit, right? Because there was no other major levels that I showed you up here. So I'll show you what the other major level was. And real quick, feel free in the chat or unmute your mics if you want to take a guess as to what we caught right here. Any guesses?
Another golden pocket.
Bingo! And I'll show you why this rise on golden pockets was a little bit tricky. So I'm hoping all of this made sense. So that's how I would have played the scenario. I'll upload this video so you can watch back and then go and look at what you were thinking in the time and how you would have played it. But that's how I would have played that scenario if I was trying to get into those positions. But of course, the best time is to get in initially on the initial reaction, and then just set your stop loss to entry, right? Another thing that you have to remember is, so I'll talk more about this, but everybody has their trading rules, right? And one of my trading rules is when I hit my weekly or daily target or monthly target, I theoretically should stop. And then, so I probably should stop trading on Tuesday. But I'm just way too addicted. So when you ask me if I would take an entry, that's also like weighing in the back of my mind. It's like I probably need to stop. But like when you see when you see, like, I think it was on Tuesday I posted all those breakout trades, like I'm probably less likely to take more trades, if that makes sense. So okay, hope this is all making sense so far. Now let me go over the big picture on where these golden pocket pulls came from. Oh geez. Yeah, let me erase all drawings. Oh, as a pro tip, I don't know if you guys saw this, but here you can make folders, right? This is how you declutter your chart. So I have all my higher time frame. These are just all the monthly, dailies, and weeklies. Okay. Then I have my lower range volume. Then I have my higher range volume, my naked point of controls. Okay, so you can toggle all these on and off to declutter your chart. This is immensely helpful. So you can just be like, okay, where's my lower range volume? Where's my naked point of controls? Where's my higher term? And how does that line up? Because I think I saw Carolina's chart yesterday. It looked like this, which is what my chart looks like sometimes. But you need these toggles, right? Like, look, if I'm trying to analyze, okay, let me just show you some of my other drawings.
Oh man.
Looks like a war zone.
Yeah.
That's literally what my chart looks like now.
Yeah. But notice how when I showed it to you, I had different things on and off. Like, how on earth do you analyze anything? It's like, oh, let me look at the higher turn time frame. What is Bitcoin doing? Yeah, about that. But if you look at it, some of these are key levels. Like this trend line caught this high. I can't even see, but there's some of these speed fans, pitchforks. I'll teach you guys all of that.
Man.
Someone take a screenshot of this. Charting with Mike Jang 1 be like.
Seriously.
Dude, facts.
Yeah, but I mean, all of these have like this right here. So look at this. The 618 speed fan caught the low right here. Insane. I also had a 1.618 and the 618 speed fan. But anyways, so all of them have a very good use case. So let me go over some of these because I posted some trades in the group, and this is why this was a little difficult, right? So when we were in this, and here's the thing, right? People hate consolidations. If you take my consolidation trades, they're very accurate because there's just when you look at overall fit pulls and all that, there's only one place to pull, right? Because if you're here, you just moved up to down, you just had one place to pull, right? And here's what I mean by that. So on a side note, guys, we're still forming lower high market structures. I wouldn't be surprised if we go down, because look at this. For the I'm not saying that Bitcoin can't go up. Okay. Look at this. We're still forming lower highs. Even if you go here on a closing basis, this is still lower highs. So look at this. Lower high, lower high, lower high, lower high. This was a very bullish move, but I posted all the warning signs yesterday, and nothing has changed in terms of, there's no buyers coming in. And I won't go over this too much, but one day I'll teach you guys this, and this is very powerful. This is exo charts. So look at this. This chart right here is net longs. So how many people open a long position? And so the green bars is net long. So how many people open a long position? The white bars is a negative net long. So how many people close long positions? This is shorts, right? So the same thing for shorts. This is open interest. This is called cumulative volume delta. So what that means is, and this is a super powerful tool, right? So on this drop, this is why this looks so bullish. I mean bearish. Where was this drop? Okay. So check this out. So the volume delta, it was going up right here pretty drastically, but price was not going up a whole lot. Okay, right here, look at this. Price was slightly trending down, but volume delta was going up. So what that means is more longs are opening and they're getting absorbed, and price isn't going up as much as you would expect. So this is all really powerful, but I won't harp too much on that. This is probably like the most useful tool I've gotten. So this whole way up, let me go over a zoomed out view. I'll go over 2 hours. Oh, and look at that, where price is going down. Magic. Okay, so look at this whole move up, right? At the bottom, we had a big influx of longs and shorts closing, but this is not a very high volume signature. Like your amount of longs opening, not very high. Oh, you had a ton of longs. Dang, that's a lot of longs get squeezed. Okay, so this is what I was talking about. Short squeeze, short squeeze, short squeeze, short squeeze. A lot of shorts getting squeezed with no real buying interest. Let me see if I can go far enough back to... Okay. If you look at the initial 30K dump, where's this nope, 31K dump. Okay. If you look at the 30K dump, right after the dump, the next candle, 146 million buys, 86 million buys, 35 million buys, right? And then 56 million buys. So we had a lot of buys right here. Even on this one, we had like 61 million, and then you had consistent 6, 3, 13, 38, 9, 3, 5. Okay, and you had some buys. And then the buys started waning out, and what do you know, we go down. So here, we had that initial pop of 32, and then we had, this was all towards the bottom, 2020. As we got up here, there was not much. There was the 41 right here, and then we dwindled down. So there's not a lot of buys. So this will cue you in on a lot of what's going on. That thing is like magic, by the way. Like I can look at it on a 1 minute chart. I can be like, oh, in the next like 5 minutes, this will go up and down. That's not to brag, but I'll teach you guys that, and you guys can know intraday moves. So look, so we're lower highs, right? So if we're coming up to here, you have a swing high, swing high, swing high, swing high, swing high, and one swing low. So there's 1, 2, 3, 4, 5 places to pull from, right? So that makes it a little bit difficult to know like, hey, which one is the one that's going to reverse. They're all potential reversal points, and that's why I put in shorts. And I'll tell you guys this, and this is more of a philosophical thing, but I think it's very important. If you own any Bitcoin or crypto, think about this, right? Like, let's say, especially from my point of view, but if anybody's watching this video, I own 0 Bitcoin and I pay per trade, for the record. I don't own any Bitcoins. What's a Bitcoin? Okay, so let's say, hypothetically, if your friend owns a lot of Bitcoin, right? And if you miss a long trade, so all of my bybit accounts are Bitcoin settled. So I hold Bitcoin, I don't hold US dollars, right? If you're sitting in Bitcoin, so let's say for hypothetical purposes, you have 1 Bitcoin, right? Nobody has 100 Bitcoin. That's insane. Nobody has 100 Bitcoin. But if you have 1 Bitcoin and Bitcoin goes up from 30K to 60K, right? And you miss that long, did you make money? The answer is yes, you made a lot of money. So by missing that trade, your portfolio still goes up. Same with your altcoins too, because altcoins follow Bitcoin. On the flip side of that, if you have one Bitcoin sitting at 60K and Bitcoin drops from 60K to 30K and you miss that short, did you make money? And the answer is no. Did you lose a lot of money? Yes. So that's why, as much of a Bitcoin bull as I am much more interested in, making sure I don't miss a short than not missing a long, right? Because if I have no trades open and Bitcoin goes to the moon, like phenomenal, like my demo account is going up, right? A lot. But if Bitcoin, does this and gets, oh man, where's my brush? Bitcoin does this and goes to like 24K and I don't have a short in, my demo account gets wrecked so hard on the US dollar value. So I hope that makes sense why I want to catch shorts more than I want to catch longs. But on the flip side, like, sure, if you catch a long and it goes to the moon, your Bitcoin value goes up, your number of Bitcoin goes up, phenomenal, like great day. But remember, the first rule of trading is capital preservation, right? So if you're preserving your capital, you should be looking for shorts. Now that doesn't mean blindly short every single breakout all-time high because you'll get wrecked. But if there's a area of confluence and a strong resistance area, right? So like we took quite a few shorts. I think it was like here and here. So look, if you took this short and made like 3 out of 800 pips, and the rest got stopped out and break even with a potential that this will hedge your portfolio, I would say that's worth it. Same thing with here, right? Right here, if you got 3 to 400 pips, I think we got like 800, but you get a chance that it'll plummet, hedge your portfolio, definitely worth it. And then even if, so this is for people with a lot of crypto, let's say at a major bull trap area, like you hedge right here and you lose 400 pips, I would say that's even okay, as opposed to missing like, so if you hit a 400 pip stop loss right here, I guarantee you that's a lot less money than your whole entire portfolio crumbling. I think for most people that are like crypto maximalists, right? With larger demo Bitcoin accounts, of course, because this is not financial advice. I'm not a financial advisor. I don't have any Bitcoin. So you'll learn that if you ever got hacked before. Yeah. Anyways, protect your Bitcoin. If anyone asks you, you have 0 Bitcoin, so you don't become a target. So anyways, and that's a nugget too for when you guys get like 7-figure accounts. Your large accounts do not exist because you will be a target, especially if you hold crypto. Anyways, so as I was saying, there's multiple targets to do the FIB pull. So the major ones, let me go to 2 hour. Okay. The major ones are this top right here. Okay. Actually, let's just look at the result of this one. So to be fair, you did get a rejection. Right. You would have at least secured 400 pips, and then you would have not gotten stopped out. Right. So also had my major level was like right here too, actually. So this was a big one. I don't think this one worked. Yeah, this one was not working. There was a lot of momentum coming up here. You have this one right here. So not bad, 600 pips. By the way, I do not blindly recommend just taking every golden pocket, but you guys have seen, if you knew nothing else and just blindly took trades off the golden pocket, you'd probably have an over 50% win ratio, and that's insane. So when you combine these with other tools, this is how you start getting 80% win ratios. But imagine literally taking one tool and you can just blindly, not knowing anything, just take every single trade that hits this one tool and you'll have over a 50% win ratio. Like even if you had a 50% win ratio and your stop losses were 400 pips and your wins were average 800 pips, you'll still be massively profitable over time. So just think about how powerful that tool is, and hopefully that's an incentive for you to memorize this tool. Okay. From this pull, oh yeah, we already talked about that one. From this pull, look at that, off to 6-6, 1100 pips, give or take. Not bad. So here's the one that I missed because I didn't zoom out. So this is why higher time frames are important. And I'm human, I miss things too, right? And this is why I say I should stop trading, because after a good week, you know, you start celebrating, you start cracking open a few Trulies, your mind is not as sharp. So apologize for missing this, but this is how you guys catch it. To the dollar, right there. 2 to the dollar. So I don't know if you guys want to screenshot this, but anybody that says you cannot call the highs and the lows, like if anybody that says you cannot call the tops and the bottoms, I will show them consistently that you can, right? It's a matter of I've either identified the tools on calling that top or bottom, or I haven't. It's not a matter of is it possible to call the tops and bottoms, right? So I hope this opens up your guys' mind. But look at this, to the freaking dollar. So if I was awake during this time, which I was not, I needed the sleep, or if you know, I was a little bit sharper and didn't celebrate after that. Because I mean, think about it from my perspective, right? You have a short from here, here, so here, 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 and here. If you have those shorts and this drop happens, I'm sure you'd be celebrating too, right? Just think about all the demo paper trading fake money that you would have made right here. Like insane. So you probably would have been celebrating too, which is a key to take some time off. But anyways, so look at that. To the absolute dollar. Swing high, swing low, because this made a lower low slightly by $100. To the absolute dollar. So I mean, feel free to unmute your mics and let the audience know how insane that is.
So mind blowing, Mike.
Yeah, exactly. Lisa, I think your mic unmuted, but I didn't hear anything.
Like mad FOMO right now.
Like, isn't this insane? Like, I hope this excites you for the simple reason. By the way, MJ, you can chime in on the mind blowing stuff if you want. I saw you unmute your mic.
No, man. I've been on so many Zooms with this type of stuff. This is just different. This literally, like, I'm gonna get a little spiritual, but this resonates with my soul, man. It's just different.
Yeah.
Really
I'm gonna tell you what, and I'll say this on a live video, and this is gonna get recorded and uploaded to YouTube, but it's 100% true. Like, look, I truly believe two things, right? I'm not saying like, I'm not trying to brag or anything, but just with our stats and results, I truly believe that like I'm probably top 1% of crypto traders right now. And that's not because I'm smart or I'm cool or anything like that, but I truly believe two things, right? Like I'll outwork anybody and I'll outpray anybody, right? So, you know, obviously we have to put in the work more so than anybody, but I firmly believe that without God, like I wouldn't have this edge, 100%.
That's why I feel like I'm connecting so well with it, man. Seriously, I agree with you.
Absolutely. And that's twofold, right? Because, you know, you get some people that only lean on God and just sit on their couch all day and like, bro, nothing's going to happen. And then you get some people that are like, oh, I'm only going to lean on myself, which, I mean, you can do some stuff on your own strength, but with God's strength, you could turn 60% win ratios into 80 to 90% win ratios. So I like those odds. I'll lean on God all day with those odds.
Amen.
Amen, brother. But so those are my top two things. My third thing is I understand the psychology behind a lot of why these things happen. Which is like, you know how like when you go to school and you learn something, like you learn like 1 + 1 = 2, or you learn like some fraction or whatever, right? Like you could remember a million textbook definitions, but if you understand the reasoning and the psychology behind why that happens, you guys would all agree that you can apply that method a lot better, right? So that's why I believe understanding the psychology behind why everything, what happens, that's why I understand game theory and market dynamics is so important. And which is why I think, I mean, I'll talk about where we are right now, right? But, and just to get you guys to understand the psychology about behind why this works. So these are the FIBS in crypto that get used very often. You could put this in your trading view. Okay. The 382, the 618, and this one I change sometimes. So the 6.5 is the official golden pocket. You can use it a lot more in slower moves. The 6.6 is an average of what works really well. Modified golden pocket. 6.7 I use in very volatile moves. But to keep it simple, if you want to take the average, it goes 6.6. So I hope that makes sense. Here's why the FIBS work so well. So if you guys have watched a market secrets and psychology video, this market is controlled by the big money, the market makers. Most of these guys do not manually trade, they use bots. And bots and algos target fib retracements, right? Like, as simple as it sounds, that's what it is. That's why, like, even if like 382s and 618s, even if you're talking about a move that doesn't hold, a lot of times you'll get a big bounce just because you have bots and algos blindly buying and selling these targets. And then what ends up happening, because the 618 is too easy of a bot, algo, and target, the bigger accounts will overshoot. So that's why sometimes, like, you just get a 618, perfect bounce to the T. That's when the bigger accounts aren't messing with the less big accounts, right? They just let the 618s play out and they let you get comfortable and let the 618s play out. Other times they'll overshoot the 618 and go into the golden pocket and go to the 6.6 or somewhere in between, because a lot of times this will stop out some of the, I mean, that's 500 pips. Sometimes that will stop out the less big players, we'll call them, and that will provide liquidity. So that's the psychology behind why this modified golden pocket works so well. So, I mean, I'm sure you guys have seen this if you're in the group, but if you haven't seen this, okay, where did I do this pull from? Where is that? Oh, impulse bottom. Okay, so this is the bottom where it got impulsive, right? Say it ain't so. Say it ain't so. Even on the largest dump in the history of Bitcoin, the golden pocket caught it. And this is how some of my average entries, like this was a preset order, but I mean, I have the account to float it. Okay, so, full disclaimer, don't try this at home if this is risking your account. But I had the account size to float some, because my target was 31, so I was like, what if it overshoots and goes to 30K, right? Because I was calling 31K. All, by the way, I was calling 31K in April when we're over here, in case anyone's wondering. So I called the 31K, so I was like, I should have some, I took profits at 31K, but I was like, I should have a buy order under it. But don't try this at home if your account cannot float it, because you will get wrecked. But also, if you have a million shorts coming from down here, your profits will cover your stop loss. Like, you could probably have a stop loss down to like here, and your profits from all this will cover it. So that's why it's nice having trades in multiple directions. But say it ain't so. Is the GP running the market or what? Let me show you this. Right, I already showed you this. Say it ain't so. Tops to bottoms to tops. Man, too good. So good, church. Anyways, that's what people randomly yell in our church. But oh my, is it going down? Don't tell me it's going down. Like, I don't like to, and this is not to poke fun at people, but the people that, like, think about this, right? This is my gripe with the people with like millions of YouTube followers and tell you up only. If you're of the up only mindset and you log this, you're absolutely wrecked. Like, if you think there's zero possibility Bitcoin will ever go down because of El Salvador and stock flotation, all that, you're gonna get like wrecked longing this, right? And we're pitching that approaching that fib time pivot, which if we go down to 30K, I will do a live video for you guys to do the swing failure pattern of 30K. We will go nuts. But any questions on how I'm pulling this golden pocket or how I'm using the golden pocket, or just anything? Any questions on the golden pocket or the 382 in general?
I have one. Can you do a fib pull on like the most recent, like current setup, and like if it's moving in this direction, like this is where you would be pulling it? Because I guess in the moment when I'm looking, if I didn't pre-chart it out based off your charts,
Mm-hmm.
and in the moment and it's the price is moving, I'm like, oh shoot, like I'm confused on where to pull my fib.
Okay, you want an easy way to remember it? Okay, so if price is coming down, like, are you talking about which direction do you pull it? Like from up or down or down to up? Is that your question?
That and then yeah, actually yeah, that would be it. Because like in the current moment of the price, I guess I'm too fixated on what the price is actually doing
Mm-hmm.
to pull myself out and be like, oh, this is the bigger picture. Like I need to pull from here.
Okay, two things that I will comment on that. Number one, if you don't have something charted out or pre-planned, never take a trade. If a price comes to a level, like if you guys will realize, pretty much all my trades, like randomly, the only times that I will give you a random entry that was not posted ahead of time is like if a retrace formed, right? Where because you cannot pull a retrace if price hasn't formed a top or bottom. So I cannot post a retrace ahead of time. But everything else, when I take a trade, oh, Jesus. Okay, bad example. But every time I take a trade, it's pre-planned. So if you're in the moment thinking about if you're gonna take a trade, if it's approaching a major level, do not trade it. Like absolutely. Actually, let me see something. Is there?
To clarify, also, I kind of meant it more in regards for the take profits.
Okay.
But no, this is also really good too.
Yeah. So that's in general. But by the way, I just noticed this. If you miss this long, say it ain't so. Say it ain't so. If you missed.
But
this,
really quick, okay, see if we did miss that long, how do we know to pull the fib there and catch it there? Because it's still going down.
Mm-hmm. Great question. Okay. So let me cover the direction one in case anybody watching this is confused. So in general, if price is coming down and you're looking for a bearish retrace, so you want price to come up and bounce down, right? So if you want price to bounce from your fib and go down, you pull up to down. So what that means is you go pull up to down, right? And then same thing with if price is doing this and you're looking for it to come back down and then go back up. So if you want price to go up, then you pull the fib up. Okay. By the way, notice how I already can eyeball where the golden pocket is. That's how you know I'm a freaking nerd. So in general, if you want price to bounce down and go down from your golden pocket, you pull the fib down. If you want price to bounce up and go up from your golden pocket, you pull the fib up. So does that part make sense so far? And I'll tell you where I'm picking the highs and lows next. But does the direction make sense?
Yes.
Okay. So here's how I would have found this one. So Fibonacci pulls, you pull from swing high to swing low, right? But some of the swing highs and swing lows are relative and some of them are absolute. So here's what I mean. Like on this range, this is why this was a little bit harder, because from here, this was a local swing high and a swing low. So this would have been one pull. This was a local swing high. This was a local swing low. This would have been another pull. This was the range high, swing high, and swing low. So that's a pull. But if you're looking to take profit, okay, for example, on this move, from here, where, so so you can't control the screen, so you can't really see this. So this is where I'm thinking to myself, right? If you shorted right here, okay, where would I do my pull? This is a safe option. This was a major low if you look on the candlesticks and came up. This was the absolute low, right? So you had the high. So if you're looking at this range right here, okay, so price came up and formed a low. I wouldn't use this low because price formed a new high and then there's a new low, right? So in other words, if let's say price did this, I would use this low because there was a new high. Well, I mean, this would be the low too. So this would be the low, right? I would not use this low because it formed another high, reversed, and it was here, right? So I would have used this low if, let's say, none of this happened. So if this didn't exist and price went like this, right, came to this low and then came straight up, then I would have used this low if this didn't happen. So I don't know if I'm making that confusing or making it make sense, but this was the last major low after the last high. So you want to pull from here to here and have your 382 and GP on. And that caught it. Okay. If you're here and you took a short off of here, okay, this is the last low, take your low to high, did not hit the 618, but hit your 382. Okay. If you took a short off of here, I'd probably go here. Okay. Because look at this, it formed a high and a low. Like these, I wouldn't classify because even on a 15-minute time period, it just looks like a small stop. It didn't look like a full-on retrace. Like this one retraced to almost the 382, right? This one, oh, actually, to be fair, that was the 382 as well. So I guess that's valid. But also, like this spent what 30 minutes here. This spent 2 hours. So this is, and this is where like experience kicks in, and you kind of just have to play with them and check out the different pulls because, you know, you just kind of gotta get a feel for it to where, look, there's absolute highs and absolute lows. Like that one is an absolute high, right? So if you ask me, Mike, where is the overall golden pocket of the entire range? There's no gray area. There's no like open to interpretation there, right? But, you know, if you're looking at this fib pull, okay, this is where, you know, this is where it gets open to interpretation, right? Like, do you go there or do you go here? Well, even if you go here, the good news is the 382 was a nice take profit, but didn't catch the low. But also, like, look, this would have worked. Even if you pull the 382 from here and you entered in somewhere here, that's still 1,000 pips. Like, you would have gained. I mean, you would have had a nice take profit. But from a take profit standpoint, I like to have at least a pull that's a lot more local and closer. Because if you took it up here, this would have been like your 400 to 500 pip take profit, right? 3 to 4, 3, 4, 500 take profit 1. This would have been take profit 2, 1,000 pips. Which I just want to say on record, I'm going to make fun of myself again. Okay, so can we just marvel how well this golden pocket worked? Okay. Freaking 6,000 pips, right? We can all acknowledge that this golden pocket worked. And as a side note, while I'm at it, look, 382 didn't quite catch a front run, but you know, 382s for trending moves. So this golden pocket worked, right? This is why you don't trade when you're tired and spook yourself out of a trade, because look at this. We had a trade at 32.9 with the golden pocket right under it. Do you guys see this? Entry 32.9. I psyched myself out for negative 200 pips because I was tired. And you guys can throw F's in the comment, F's in the chat, WTFs, because when you make a colossal mistake like that, F's in the comments, right? This is what happens when you're tired and you don't sleep and you don't trust your tacticals. If I let this trade run, it would have run for like 7,000 pips. Look at it. I put it in our... I even put this note here for everybody to see when I do a screenshot of this. This one went for 7,000 and I exited based on emotion. Never forget, R-I-P, baby. R-I-P. But we're still at 127,000 pips on the month, so not bad. Yeah, Lisa freaked me out. Everybody blame Lisa. Everybody in the comments go yell at Lisa. I'm just kidding. I'm just kidding. It's not her fault. But this is why you trust the technicals. I mean, this trade is... I mean, you can look at it in this chat, right? But again, let me go over... I'm just kidding. Lisa, it's not Lisa's fault. If you're watching this video, it's not her fault. But okay. So this I'm going to touch on if you want to get into trend trading. So this is like, sometimes I get asked like, oh, I missed this long down here. Where do I long next, right? In a trending move, you look for the 382 or the golden pocket. So if you miss that move, this is what you'd look for. Low to high. It barely missed the 382. You could have theoretically just front run it by, what is this, 30 pips, and it would have took off. Another local move. Okay, from high to low. Okay, that was a perfect 382 touch. This would have been a perfect trade, and it never came back to your entry, right? This one, and in general, here's how you gauge it. If it's a shorter consolidation on an impulsive move, it's probably going to be the 382. If it's a much longer consolidation and it takes a lot more time, it's probably coming down to the 618 or the golden pocket. So that's a nice nice rule of thumb, right? If it's like going up and up and up, doesn't spend much time, 382, boom. 382, boom. This one took a long time to consolidate, gradually came down around the 618. But this is how you catch it. Like, if anybody asks me, I missed the trade, what do I look for? Look for a 382 or a golden pocket, preferably if there's a support resistance flip, or if there's another major level. Like around this major level, I forgot what I took it off of, but I think there was a weekly right here, right? So in hindsight, you guys can put more F's in the comments, because look at it. My own rules, if you're catching a trade, okay, long form consolidation, came down to the golden pocket, there was a weekly somewhere right here, major level, turn into support, SR flip, turn to support. Man, that would have been a nice chunk of demo cash right there. Whew. Anyways, let's check this out. Are you guys even surprised? Look, random FIB pull. Where do we stop? Golden pocket. Like, are we even surprised anymore? This is probably a 382, but if you go more local, golden pocket, golden pocket. So this is how you guys can identify them on a trending move. Now, I would argue that it's probably going to downtrend now, but on this uptrending move, right, 382, this was your golden pocket. You can trade the trend till it works. Like, if you literally, right there, right? If you literally just look for 382 and golden pocket retraces, right? Slow consolidations, 382, long consolidations, golden pocket, right? Long consolidation, golden pocket, long consolidation right here, golden pocket. This was the one that did not hit, which it never came back down to your golden pocket, but you would have not lost on a trade, so it doesn't matter, right? That one didn't hit your trade entry, who cares? So if you actually traded that strategy, you would have had 1 win, 2 wins, 3 wins, 4 wins, 5 wins, 6 wins, and then if you did it right here, like let's say you just blindly, I wouldn't have, if you just blindly implemented that strategy, ooh, wait a minute. Okay, so I'm saying if you would have blindly just implemented this strategy, will it work on Forex pairs? I don't know. I don't trade Forex, so I don't want to mislead you. Okay. So even if you blindly traded this strategy, if you hit the 3-8, if you just blindly hit the 382, okay, that would have gave you at least your 300 to 400 pip take profit, stop loss at entry. If you blindly traded the golden pocket again, whoops, that would have been at least your 300 to 400 pip take profit, stop loss at entry. So think about it. If you blindly traded this strategy, it would have still worked. Like literally would have still worked. Just the last trade. So look, you had the 1, 2, 3, 4, 5, 6 massively winning trades. You probably could have caught like 40,000 pips right here. So 6 massively winning trades, 2 small scalps that would have got stopped at entry. And on the flip side, you could have still took all the shorts. You could have scalped short here, scalp short here, scalp short here, scalp short here. And you still would have gotten your short trades as well. So this strategy, especially, so the one time that it doesn't necessarily work on is when it's in a consolidating range, right? Like when this was trending, you could have used it when it was trending, you could have used it, but when it did this, it doesn't work as well. But like on this trending move, check this out. Golden pocket, boom. So this was the last time, coincidentally, that it hit 31K too. Right here. Or actually, this would have been the high still. Golden pocket, boom. I think that was the 382, but that one, I mean, you would have. Oh, baby, 382. Boom. Golden pocket, boom. Like, are you guys seeing this? Like, what? So same here. Look, trending move, we just had a large drop. You would have had 1, 2, 3, 4 trades, and then you would have had like 6 trades up. Just blindly trading the golden pocket, right? Like even here, if you missed the golden pocket, and as one rule of thumb, this one, the 382, you know what would have worked? Here's another thing to look for, right? Okay. This golden pocket was the first retrace of the move, would have give you the best entry. This golden pocket, you pair that with the SR flip of these highs, golden pocket. This one you knew it probably wouldn't have been a golden pocket because your 382 was your SR flip. This golden pocket was your resistance support flip. Are you guys seeing this? Like, this is absolute insanity. Like, for me personally, if I'm in front of the computer, I'm scalping these all day, right? But most of the time I just get into like 1 or 2 long positions and I just let it ride. But if you're scalping this, I mean, these aren't even scalps. This is like 5,000 pips. It's insane. So that's what I'm saying. If you just blindly long and short the golden pocket, it would work. But you want to combine it with SR flips, right? Like this one. Where did I pull it from? I think here. Well, golden pocket. SR flip. Here. Where did I pull it from? Right here? Okay. Golden pocket. Not an SR flip, so example does not work. This one was kind of a weird uptrend. This was like your easiest technical uptrend, or it was like golden pocket or 382 SR flip, golden pocket or 382 SR flip, golden pocket or 382 SR flip. Did this one work? Golden pocket, 1700 pips. Oh, did this one work? Little bit of an overshoot, but golden pocket, 2,500 pips. Are you guys seeing this absolute madness? Like, I don't even remember that far back, but I just know that a lot of this stuff, I can randomly pull a pivot, and it like, look, you can probably pull a swing high or a swing low, and there's probably a 75% chance that's going to end on a golden pocket. That's how insane it is. So, or slightly overshoot, which that would never hit your stop loss. Or sorry, this was, where was this? Oh yeah, this was the swing low. Okay. From here to here. Or let me zoom in. Where did I do it? From here. So impulsive move. This would probably be your pull. This one massively overshot it. Still wouldn't have hit a stop loss. This one caught it down. So now. So let me do this. I have to go use the bathroom for like a quick 2 minutes. If you guys can unmute your mics, and when I'm back, you guys can ask any final questions about the golden pocket. Make some comments about how crazy the golden pocket is, or if all of this makes sense as to how and why I used it, or if that trending move golden pocket pull makes sense. I think that's the most important one, because for two reasons, right? On a trending move and on a take profit golden pocket pull, I cannot post that 2 days in advance, simply because on a trending move, like here, right? I didn't know if this move was going to stop here or here or here ahead of time. I could have done probabilities to see where it would have stopped, but I could not have done an accurate pull until this move actually topped out, in which case you only had about an hour, so not a whole lot of time for me to give that call off. So that's why you guys got to learn to do these trending move calls on your own. And that's why, if you guys will recognize, I almost never give a trending call move. For that reason is because by the time I post the pull and you read it, so by the time I analyze it, put the trade in myself, go over all the other factors, go over the volume, post it, and you read it, you probably missed it. So that's how some of these happen. Or I'm just in lower, quite honestly. I'm just in lower and I don't need that trade. But okay, let me go to the bathroom. I'm going to pause recording, and I'll be right back in 1 minute.